Good morning, everyone. This is Morgan Hill, CEO and founder of Hill and Hill Financial. And it's Friday, January 23rd, 2026. I can't believe we're already into 2026, coming to you with our January monthly update. Got a couple of slides that I wanted to share with you as we reflect back on 2025 and think about all the things that happened. Certainly, one of the highlights we see here on this slide is the stock market reaching all-time highs. One of the things that I've chatted with folks about is they think, oh, the market's up, it has to go down. I said, usually the market is always at some all-time high. And just to reflect back, it was, I believe, 2010, only about 15 years ago, when the Dow Jones Industrial Average crested 10,000. And we thought, oh my gosh. And now, as we sit here today, we're knocking on the door of 50,000. And so as we look back even over history, when the stock market crashed, the Dow Jones went from 300 points to 200 points. So what we can see is the truism that over time, the market goes up. Now, there's a lot of detail in there, and based on age and your risk tolerance and volatility, you definitely want to have a very well-balanced, constructed portfolio. But it certainly was a good year as we reflect back on it. Major indices were up. We saw things like gold and silver reaching, especially silver, reaching some all-time highs. And then one of the things to reflect on is what's called the VIX index, VIX. That's a measure of volatility. I call it the fear factor. We actually have seen some pretty low measures of the VIX index. We finished at a measure of about 14.95. It's just how they measure it. But it was as high as 52.33 in April. So what I just want to highlight is, yep, we've reached some all-time highs, but we'll see in a minute that, boy, it sometimes can be a bumpy ride. This next slide is what I just alluded to, total returns and pullbacks. I just wanted to do a little bit of reminder of corrections and pullbacks and bear markets and those types of things, because now that we're on a pretty high base, right? As I sit here right now, I think the Dow Jones is hovering in the 49,000 range. First of all, a pullback. A pullback is technically defined as a 5% drop in the market. Well, I equate it to if I'm driving down the highway, and you probably can relate to this. If you're driving down the highway and your car just pulls slightly to the left or slightly to the right, nothing major. We'll check it at the next time we take it in to get the wheels aligned. But that's just normal course correction. Nothing major. Well, a 5% pullback on 49,000 is sometimes 2 to 3,000 point drop. So we'll often see and hear the headlines from the squawk boxes on TV. But when you take a look at the absolute percentage on the number, that's not uncommon. And so I just want to kind of say, everybody, that's normal. That's a pullback. A correction is negative 10. So let's go into a little bit deeper. If the market were to drop 5,000 points, oh my gosh, you would think, and I've heard it where the news people are like, oh, the market's coming to an end, it's all over. And I said, no, corrections are normal too. And so as we go throughout the year, just realize those 5 and 10s are part of the process. Just like, you're correcting and seeing things when the car is driving down the highway. I don't see those as cause for concerns because, as you can see by the chart, they're pretty normal in the total movement of the market over time. So that's where we don't want to overreact or underreact when you see those 5 to 10% pullback and correction movements in the market. You want to stay focused, stay in line with your overall strategy, and don't make any big snap decisions based on those numbers. Here's the third and final slide. It says Magnificent Seven performance. There were several themes that I think worked at defining 2025. The Magnificent Seven performance. And as you can see, Meta, Facebook, Amazon, Apple, Alphabet, NVIDIA, Microsoft, Tesla. These are the big ones. And one of the things that I wanted to highlight is the Magnificent Seven are everywhere. Actually, the S&P 500, the biggest U.S. stocks, a third of them are these seven. And so we just want to realize that, there's a lot of exposure to these technology drivers, and it's been fun when all is good. But just want to be cautious and realize how much it's in almost everything that we do and see. And again, depending on your risk tolerance and your profile, we just want to be aware that they have a pretty big weight in what we're seeing in the market performance. The second thing was tariffs as we look at 2025 and actually as we look forward. Historically, just based on observation, tariffs in the near term have some impact on pricing, but in the long term, they kind of supply demand level themselves out. But what we saw last year is tariffs can be very disruptive to the market. When one day everything's cruising along and then there's an announcement about how many tariffs are going to be leveled against this country or that country. I'm not here to make any political commentary on tariffs, but tariffs are a tax policy and they can create uncertainty and disruption. And what we've seen is they can just kind of pop in without any warning. And so we just need to be prepared for that. That was a theme for last year, and I don't think that's a theme that's going to go away as we move into 2026. And then the final theme is there were lots of asset classes that performed well versus it was just one group. International stocks outperformed U.S. stocks. We saw bonds generating strong returns. We saw certainly precious metals, gold and especially silver, just skyrocketed. And so here's the bottom line as we take a look. It was a great year in 2025. Be aware that pullbacks and corrections are just part of the journey. There were several themes about how these 7 big stocks and tariffs can be disruptive, uncertainty, lots of different asset classes. But what it points to is what we've talked about consistently, and that's how those 3 worlds of money can be used to well diversify your portfolio. How we have the stability of money and fixed rates, and then maybe we do have some growth in the portfolio based on your written risk tolerances and need for money, whether it's for growth long term or income short term. And so as we look at 2026, people have asked me what's my opinion. And my opinion is I'm cautiously optimistic as I look forward based on Fed funds rates, interest rates, unemployment, et cetera. But I do think volatility and uncertainty will still rule the day. So that's why we want to stay balanced and focused. As always, feel free to call if you have any questions outside of our normal review times. 800-887-9647 is always the number. Happy to help. And again, wish everybody a happy new year and look forward to working with everyone as we move forward into 2026. Thanks again.